You guys should be seeing my what I call my context screen.
Yes, we are.
Cool, because today, and well, first of all, let me introduce the topic in the class. We may or may not have a guest or two. Um, excuse me. This is a weekly. I think we're going to continue doing this. So a new, but we're in our third or fourth edition of Dino's weekly recap, and there's two parts to this. I do this every Fridays at this time. There's two parts to it. The first part is just kind of a what's going on at the end of the week. You know, what happened this week. Look backwards, kind of looking forward to next week. You know, I do a Sunday reopen session also. So this is kind of my end of the week, not knowing exactly how we closed. And the reopen is the reopen of Globex on Sunday, not knowing exactly how our TH is going to open. So, and that's intentional. It's to just kind of put parentheses on either end of the week. And then the second part, I will, in a couple of weeks, I will have been trading for 50 years, not exaggerated at all, literally. And so the second part, I just kind of talk about something from my experience that's relevant, more psychological or process oriented, that kind of thing, and not a long session. I just whatever's on my mind that particular week. And today I have a kind of what's the reality of trader life, and if you're kind of new to trader life, some ideas to kind of make it to 50 years if you want to do that, because this is not a complicated thing to do, you know, trading and, you know, developing an edge and then trading your edge. But it's also not easy. It requires a lot of, you know, focus, discipline, compartmentalization, confidence, knowing when to question your confidence. And anyway, and I won't have time to go into it in depth, obviously, but I have a couple of good thoughts about that. So we'll catch that part second. First of all, this week, well, we cleared FOMC and NFP from last week. And, you know, this was the week where we were going to get all that stuff priced in. And guess what? Look at my ES TPO view here where my mouse is. Fourth from the right of the top TPO views. Now, you know, we have a leftover per week high above us. And we have a bunch of single prints, but the significantly interesting thing to me is that we're at the bottom of this range. We're actually at the top of the old range. And I talked about this last Friday, and I talked about it in my Wednesday session. That, you know, so basically at this point, if we close down here low, we've rejected this range that we got out of the FOMC decision. For whatever reason, got us up there. We're now back where we were before that. And we've seen this over and over and over. This is very bear market behavior, number one. And number two, it's very consistent with big sudden moves on the day of the announcement. You know, there's the reaction to the reaction, then it gets priced in. Well, here's priced in. And guess what? The market is like, you know what? Glad we got up there. We got shorter. You know, now we're back here. And, you know, and we're defending, you know, there's an air pocket here. We're defending the top of this, but we're nowhere near the bottom of it. So this entire area is kind of in play. And certainly, you know, we could hold here and go back up. It's just not clear that that's in the cards at all. And again, I don't like to predict what's going to happen. I just kind of look at this from a range point of view. And from a range point of view, you know, we left UB at the high, we left UB at the low today. You know, it's perfect scalping conditions, but reading anything, you know, well, you know, we're done going down. This is the beginning of a new bull market. You're reading anything like that, or reading that, okay, that was the, you know, bounce of the year, and now we're going to retest the lows. You could argue either one of those. I don't really have an opinion. I don't even have an opinion about the opinion. I have no lean on this one right now. A couple of days ago, I was definitely thinking on the short side because we just couldn't challenge the high that we had made after the FOMC and NFP. You know, it was working the bottom of the range, and that always tells to me, you know, if it doesn't go back in the range right away, that we're going to go back to the next range down, and that's where we are. And now we're defending the top end of that range, and I've been playing both long and short today because it's not clear at all, and that's good. You know, as long as you don't have an opinion, you can't, you know, get trapped really far off sides. You just have to manage risk and go with whatever's happening right now, which is pretty much my story on this for the weekly recap. I think it's too soon still. At this moment, at this price, I think it's still too soon to conclude what's going on. If we continue to see weakness. I think the lows could be in play. And let me bring up another view just to kind of zoom out just a bit. This is the dailies for 2 years with the fibs on them, and the fibs just high to low. The all-time high in most of these indexes and all these indexes, and then the recent low that we're bouncing off of here, that was back the end of last year. So we're in the ambush zone still, and we haven't even bounced that much in NQ, certainly, or in RTY. Those are at the low end of the bounce. YM is remarkably stable up here at 60%, right on the ambush zone, and ES is kind of piddling around 50. So it's really hard. We broke the downtrend. Yes, that's true. Are we going up now? No. When do you find the biggest rallies and bounces? In bear markets? And, we were in a bear market up until this bounce. And yes, every bounce could potentially be the turn, but I don't, have any reason to believe this is it yet. So that's kind of my view. I've said this for a few weeks now. I think the opportunities are like yesterday when the market broke down. It was just such a great opportunity to play that and go with that short. And look at this right here. It just was so methodical. And when the market gives you that, if you just focus on what it's giving you and not what you think might happen next, it's a much more certainly less stressful way to trade, but it's also a much more effective way to trade. So let's see. I'm going to stretch this out so I can see the questions. Oh yeah, no, absolutely. The ambush zone is a really simple concept. It's Fibonacci retracements, which are, a technical indicator for how much have we bounced, from the high to the low. And you see these are percentages over here. And what's marked on retracements are 0 and then 23-ish, and I always round these numbers, but they're more precise than that, 38-ish, 50, 61-ish, 78-ish, and then back to 100% of the drop, right? So it's a percentage of the drop. It's called a Fibonacci retracement. And the ambush zone is just when that bounce gets typically, there's different people use different ambush zones. I think a legitimate ambush zone is anywhere from the 38% or call it 40% up to, pokes around the 62% number. Most people use 50 to 62% as an ambush zone. And what that means is both longs and shorts see their setup there as being correct. We've broken the downtrend, so the longs are saying, okay, we're no longer in a downtrend. It's the beginning of an uptrend. And the shorts are saying, oh, wow, we just overshot the break of the downtrend, and it's a great place to reshort. So you can make a really good case either way. And so from a technical analysis point of view, everybody tends to get ambushed. So it was named the ambush zone. And this goes way back. This is one of those, at least to the 80s somewhere. I may be further back than that, but I remember having that term in conversations in the 80s. So that's the answer, Brian. And yes, you can always ask that kind of stuff in this session. And anybody else has other questions, by all means, stick them in the chat. So anyway, it just means it's a really tricky spot. Both bears and bulls tend to get ambushed. And so, that's why I love being a scalper, because I really don't care about that. I just know there's going to be good volatility here in the ambush zone. So that's perfect for what I do. And we're having a really nice little volatile day. I'm just double checking. I was about to say we haven't broken the first hour yet, and we haven't. Double check me on that, JVC, if I'm wrong, but I think we have not had a break yet.
We have not. It's been really weird.
Yeah. So and I'm doing the normal closing session today, the Friday closing session as well. This close could be interesting, particularly if we haven't broken yet. But again, this has been really good scalping action. So, and that's kind of the story from my view on what this week looked like and kind of what I'm looking for next week. Until we definitively break out of these, this behavior has been going on for a long time now. Since the market stopped trending about 3 years ago, we've been getting this behavior, which is we have a range here. Let me put the yearly ones back. We have a range, whether no matter where it is, a range at the low or a range here, and then we break the range, and then we go back and we test the range, and meanwhile, we're trying to establish a low more or less here, or at least a bottom to the trip down. You could definitely argue that. But you can, again, in bear markets, that happens a lot, over and over and over and over. So, I'm not having an opinion, but I don't think the bear market's over, but I'm not trading with that in any part of my edge. So I also think it's interesting that the conversation had been about 4,200, whether that would get sold or not. Well, clearly it got sold. And I think if we definitively go through 4,000 to the downside, that'll kind of restart the action to the downside. But, I wouldn't quote myself on that either. Again, trading levels, I see people, hey, good call on that 4,100. Who cares? Our job isn't to call stuff. Our job is to pull money out of the market. So anyway, cool. All right. I'm just reading your follow-up comment, Brian. All right. So I'm just going to leave that up there for right now. You know what? No, I'm not. I'm going to go ahead and just turn off the screen share. So it's easier to put this stuff in the library. And then if we need it, we'll go back to it if we need it. But that's basically the first part. And we're right on schedule, 15 minutes in. That's the weekly recap. That's Dino's weekly recap. And the second half is kind of what I like to call tales from the tar pits, where the other dinosaurs like me rest in peace. I've been trading a long time. Most of you know the story. I started trading when I was a teenager, options on buyout candidates. That was my first genius thing. And it actually worked really well for most of the 70s and early 80s. And then I started trading the OEX, which is a mid-cap index options, and kind of like I day trade futures now, and then futures in the late 80s and equities along the way. And pretty much now I focus entirely on futures. It's just too good an instrument to really spend any time anywhere else. I do trade ETFs kind of as another way of putting money to work when there's a really good, clear situation in the market, which there isn't right now. So I haven't been doing that in a while. We are getting really volatile. I'm watching on my other monitor, I'm watching my DOMs. It's interesting. There's been some really good scalps at the edges of these ranges, but I'm not going to get distracted on that. I want to stick to my Dino topic. So what I thought I'd do the last couple of Dino sessions, I talked about specific things like, how important it was to preserve your confidence, or how to accept and deal with a losing day or a losing week. And, so we had kind of how to deal with a negative thing or how to deal with adversity. And they've been along those lines. And this time I thought I want to do something a little more positive, always keeping in perspective that a lot of trading is hard, but I wanted to just talk about what, I've been doing this lifestyle for my entire adult life, this kind of trading lifestyle. And I don't mean, the Lambo parked in the driveway kind of lifestyle nonsense. And by the way, if you ever see that, run away as fast as you can, because it's always a good sign that there's nonsense there or nearby. But no, what I mean by this is what it's like to do this for a living. What the broad strokes emotionally and physically and psychologically and relationship wise. And again, I'm not going to have time to go into any specific thing. I only want to do like 15 minutes or so. And then if there's questions or comments, we can talk about it longer if we want to. But I just wanted to hit some highlights of things that just come up over and over and over and over again. So here's a couple of them. First of all, and then this is a really important one. Assuming you're at the point where you have an edge, and your job as a trader right now is improving your execution of your edge and refining your edge, but you have a legitimate edge over a period of time, not 1 year or a week, but you've actually been doing it for a while. Assuming all that's true, even, after 50 years, you still are going to be constantly working on the business you're in as a trader. And we talked about this in the past, this kind of dividing the two primary roles of your business, the general manager running the trading business, how much capital, what markets, what times of the day, what equipment, versus, the guy who's actually just executing the trades. And they're very different mentalities. And I've talked about that in other sessions, but that's an important piece. And it's important to understand that you will always have to have a general manager. You're never just going to buy the perfect indicator or learn the perfect setup and then never have to work at it again. It's all you've achieved, if you're successful consistently, is you understand what it takes to be consistently successful. You will continue to do that your whole career. However, it does get easier because you understand what it is you have to do. It's not like you're starting from scratch over and over again. And an example of this I wanted to give you is, this week, I've spent a lot of time on optimizing my time in the market. I'm in the process of moving, and plus I'm obviously teaching TRG classes. And so I work on this all the time. If you've been around me for any length of time, I'm constantly talking about optimizing my point of view of my monitors and what data points I'm looking at, making as few as possible. Well, I've been working on that this week against the swarming and the optimization model I've talked about in the risk management 1, 2, and 3 classes. And some really interesting conclusions came out of that. And my point isn't to share the conclusions, although I'll tell you, it's much easier to stick, even if you have 2 instruments optimized, in this case, MNQ and MES for swarming. The time it takes to switch the brain set because they execute so differently, doesn't make it makes it not worthwhile to trade both. And this is interesting because first I was trading them both, but I was trying to apply the same strategy to both. That didn't work. Then I got it to the point where I had MNQ really working well. ES wasn't working as well because the strategy wasn't optimized for that. Then I optimized the ES and MES strategy, and now I was just running both optimized through the model again, and it still comes back and says, you're better off staying with one or the other, and MNQ is a better instrument for my style. I've said this before. Then even when the conditions say ES is better, like in a really tight range, executed in MNQ. You will make more money, even if you're doing effectively an MES trade. And that was surprising. And again, this is the kind of stuff that really improves your bottom line by making these little tiny changes that have much bigger than a tiny impact on your P&L. And again, I don't want to elaborate on that one. It's in the Risk Management 1, 2, and 3 series, and I can elaborate some other time. But the point is, you're always going to be working at this, no matter how good you are or how long you've been doing it. And depending on whether, you want to trade all the time or you want to just trade for an hour every morning and then go do something else, it's still important to recognize that this will take a certain amount of your energy to keep your edge and to keep everything working the way you want it to. And most people don't respect that. They think, once I've got this figured out, then I can just come and do it and then never have to think about it again. And it just doesn't work like that. The market conditions change, new equipment comes along, new platforms come along, whatever. There's just always, your general manager will always be optimizing your business and helping your trader set up the best execution, even if both of those people are you. You have to divide those two things up. And the other part of this point that I want to make here is that if you do have another life, and I know a number of TRG people do, and a couple of people like Maria are amazing at this next point, you really have to compartmentalize. You cannot bring your outside life to trading. And going the other way, if you try to bring trading to your outside life, nobody will understand what you do, even if they think they understand what you do. Because remember, think about how long it took you to understand what you do, and most of us still don't. So that's a really hard thing to deal with. When it's something that you're passionate about and you're spending a lot of time on, people can't just look at you doing it and get it. It looks like either gambling to them or It just, no matter what their level of understanding is, they won't get it. I mean, obviously another trader would, but trader couples are rare, but there are some successful ones. Damon and Linda Rasky are a good example. But it's also a great way to blow your relationship up, which is a whole nother conversation. My point is, you have to respect that besides just executing trades, you have to run your business. And the more successful you get as a trader, the more important that becomes. You have to make a business entity, and your tax situation will be different. And, the more you scale, the more complex that gets. You'll have advisors involved. And so, you really have to think about it. It's a business. You have expenses, whatever those are. You have revenue, your profits. It's a unique business in that you can work at it all day and come home with less money than you started with that day. You don't get guaranteed paid to work. And again, day in and day out, that can be really hard to deal with, which takes me to the next point that I want to make. For almost my entire trading career, I have had something else I did on the side. I don't want to say side gig so much because that's kind of a new, cool term. Let me give you examples that will make more sense than the current side gig phenomenon. But I have to say, I've had some of those too. I was an Uber driver back when there was a lot of opportunity in Uber, like just referring people, you could make $5,000 or more a month. The early Uber was a great opportunity. It was also fun. It was a new thing. And I was doing it while I was taking care of my mother, who had Alzheimer's. So it was just a nice break for a couple of hours to get out of the house and talk to other people. So that, that's like a current side gig, but that's not really what I'm talking about. In that case, that worked, that function at that time. But when I was younger, for example, I used to, after college and graduate schools, this wasn't like I needed the money. But when I didn't have a career job thing going, I would always take a job that involved labor. And one of my favorite ones was restocking grocery store shelves at night, because big stores bring in crews to do that. Sometimes the vendors do it for them, but it's physical work. It doesn't require any brain cells. It gets you away from your desk. You're moving around, you're lifting stuff. And back in the day, it paid really well because it was an overnight job and it was physical and it was a union. I don't know how true that is now anymore, but it's still, you get my point. A lot of traders do bartending. That's a very common one. My friend Jason did that while he was building his bartending or his trading business, which is very, very successful now. And you'll hear this over and over from traders. And there's two reasons to do this. Number one is this way, if whatever you do, obviously I wasn't getting rich stocking shelves at the grocery store, but push come to shove, I could pay a few bills with it if I absolutely had to. And it also just got me away from the whole mentality of trading. Nobody there wanted to hear about it and would understand what I was talking about, even if they did. And so it was just a really good way. I used to call it mental floss. If you think of like dental floss between your teeth, it was like a way of running a piece of floss through my ears, through my brain, and just cleaning my brain out so I could stay in trading focus when I needed to be. And so physical stuff is really good. Or anything that just is a complete change of perspective. And that's a different thing for different people, but that will help you do the compartmentalization. And your other job might be taking care of your kids. I mean, that's very different than trading, running around with them to different events. That's very physical also. So again, it just, for example, what isn't good is, let's say, you're a professional programmer and you spend your time working from home at your desk on your computer and you're learning to be a trader. Those things both are the same physical environment and you're sitting there the same. You can't just go to the gym and get that out of your system. It will be much better for you if you can find any way to have something else, particularly if it pays. It could be, doing DoorDash. It could be, whatever. It doesn't have to be about the money. And if there's money in it, it certainly helps. I know a lot of guys that used to do construction work on the side, and again, depending on what city you're in and, if you have any skills like that, that's a good idea too. Again, it's totally different. So that this is kind of an important point. So compartmentalization was the first one, and always be improving, understanding that you're going to have to do that. And this is the second one is about having side gigs, and particularly something that's just 180 degrees different and preferably physical. The last point I want to talk about, and we have just enough time to get into it, is so what's trader life really like? And so here's the cool big picture about this. One day, and this is a different day for everybody, okay? And trust me, you'll know when you get to this day. You'll know when it's happened. There will be a day when, and trading goes in steps. And let me be really clear here. Most people don't have a legitimate edge in the market. They think an edge is when the MACD crosses over, or when Algo Box 9000 turns green, or whatever. Those aren't edges. Edges are when you have tools to understand the conditions in the market, whether it's a footprint, or it's LRCs, or it's the DOM, or it's a liquidity heat map, whatever your tools are. You're looking at those tools, and there are certain conditions, and when you see those conditions, you know that you have a statistical probability of making money. That's an edge. If you can say that and do that reasonably consistently, because consistently is not an edge, consistently is practicing your edge, and that's part two, then you can trade for a living if you could keep that up and manage it and manage the emotions and all that. And once you clear that, so once you know you have an edge and you get to the point where you're consistent enough, yeah, you still make mistakes, but you see that there's a light at the end of the tunnel. Gosh, I could actually do this for a living. And many of you are at that stage now with your funded accounts and whatnot. This like epiphany goes off. And that's the first thing I really want to, on this trader life thing, the first part of the last part. At that moment, you know that you will never have to work again if you don't want to. And that's a really cool thing. Now, that doesn't mean you're making all the money you'll ever want to make, but you put together that this is a way you could actually make a living, or you could enhance your lifestyle if you're already retired or whatever. And that comes when you understand your edge and you've been consistent at it for enough time that you realize that that's possible. And everything else I'm talking about in this session is what you have to do after that. And you have to understand that you have to constantly improve, and you have to understand that your mind is going to need to do other things, and the side gig part. And the third part I wanted to add, and this is where I'm going with this, but I want you to understand, you have to first see that light and see that you could do this for a living, or this next thing isn't going to make any sense. But once you've got that, then there's a big challenge, but it's the really cool one. And this is the gist of this session today. This is the bottom line. Once you have that understanding, wow, I have an edge, and when I'm disciplined and I follow my process, I can actually make tons of money doing this, or at least a living that pays my bills, and those are both really profound things. Then you realize that the next thing you have to do is you have to figure out, okay, how do I do that day in and day out? And so this is what I call trader life. Again, not the Maserati or the Lambo in the driveway, but understanding what that means to have a trader's life. And a couple of key points about it. And again, this is a short session, so I'm not going to go into a lot of detail. Number one, trading has to be your priority. It's what you do for a living. Everything else has to come second when you're trading. And that's really, really hard to do. But again, remember, this is a business. You can work all week and end up with less money than you had last week. So you can't be sitting here thinking about your girlfriend or your car or what you're doing this weekend or the new house you're building or anything else. You're at work and you have to think that way. It has to be your priority. And everything around you has to understand that and let you do that, or else it'll never function. Whether it's you have a separate office or a separate home that you trade in. I have a friend that owns 2 condos next to each other. One's his office, one he lives in with his wife and kids. Genius solution. You need to really understand how important that is. You can't just put, a desk in the corner of the living room while you're keeping one eye on the kids and, expect to have the focus you'll need. You have to be able to compartmentalize somehow. And then the other thing is you have to understand that absolutely nobody else's life is like yours. The way that trading works, whether you are a structural trader and you're only trading the opening hour, or you're like me and you're a scalper and my computer's on 24 hours a day and I'm just looking at price action patterns. And when I see them, I trade them. And sometimes I'm literally just walking by my office. I go, oh, wow, look at that. That's a great setup. And, that just comes from experience. And I love that. Does that mean I sit at my computer 24 hours a day scalping? No, I do it whenever I feel like it. There's times I couldn't force myself to do it under any circumstances. My head's just not in it. And so I don't. And there's other times I've sat here for 18 hours straight scalping, through the regular trading hours, into the reopen, into the overnight. There's times I just love it. It's passion for me. I love the game. And so for me, I have to make sure I have other parts of my life when I'm not doing this. And I was always fortunate. I had other jobs I could do around trading, at IBM and at Microsoft, and I was involved with startups as a venture capitalist, which is, it's not passive, but you don't need to be in the office every day. It's more of a board member type role. And so, trading works really well with that. And again, those are examples of more advanced trader life, depending on where you are in your career. That's further down the road. But hopefully this point makes sense. What I'm saying here is whether, your job right now is flipping burgers or, Uber or bartending, or you have a corporate job you're about to retire from, or one you're desperately trying to get away from, whatever it is, you have to really look at the pieces of this and fit them together properly. You can't just do this in your spare time. This has to be a priority. If you try to do this in your spare time, what you're going to do is you're going to do a really bad job of it. That doesn't mean you can't do it part-time. Understand, listen to the way I said that. I said you can't do it in your spare time. You can do it part-time, but it has to be a priority in your overall focus of what you're doing every day throughout the week. It can't be, when I have time, I'm going to work on trading. You will be one of the people that chases indicators and $5,000 setup systems and services for the rest of your life because you don't want to do the work to understand how this game is played. But once you understand how this game is played, that's that point I was talking about. That's that epiphany where, oh, wow, I know how to play the game. I could actually do this game. Then assuming you still like the idea, that's where it really starts. And that's where you can nurture all these things. But consider that they're coming if you're not there yet. And if you are there, understand you need to keep doing this, and you'll have to keep doing it your whole career. I don't know anybody that's ever escaped that. If you read all the book about famous traders and whatnot, you go through ups and downs, you go through drawdowns, you go through relationships failing, you go through people dying. But, you don't get to go to the office and just be, in Never Land for a month or 2 or 3 at your desk, like everybody with a regular job. They can tune out and still function. We can't. We have to separate what we do trading from everything else. And that's a really profound thing. It's really cool because it gives you the ultimate freedom. You can do this anywhere you want in the world, that as long as you have a good internet connection. But, you really have to understand what doing this means. What does it mean to be focused? What does it mean, to understand the current market conditions? What does it mean to understand how well your edge is functioning at any moment? That is deeper than I have time for, but those are critical pieces to keep in mind. So anyway, let's see. I see some comments. Let's go over here. Okay. Oh, the
Mostly
business entity
Brian
stuff. Yeah. Brian, we don't really go into that because it's so different in every state and country. I'll tell you this, you don't need to worry about it until you have your first year. If you're in the US, don't worry about it until you have your first 6-figure year, because you can always play games with up to that point with the income, and it's taxed preferentially in the United States at a blended rate of short and long-term gains. So you don't pay much on it anyway. But if you have a 6-figure year, then you're probably doing something right. And what I say, I always tell this to people when they get to that point, is take a chunk of those 6 figures, and that's when you should think about setting up an entity with profits and get some really good advice, because it varies state by state. Some people set up entities in other countries, which has huge advantages, but it also costs a lot more to do that and to maintain that entity. And there's a lot of ways to do it, but you have to be current, and it has to, it varies by your personal situation a lot. And you shouldn't even think about it until, you've actually had one good solid 6-figure year, right? I think if you're doing it before that, it's really premature, because it will, just setting up an LLC will cost you a couple $1,000s, and you'll have to pay annual fees for them. And, if you're not profitable enough that you can do that in advance, then you're getting ahead of yourself. Is that helpful? Let's see. You can get another passport and get exempt. Okay, that was what I said about there's ways to set up entities in other countries. Because what you're saying is not true, Donnie. Just having another passport doesn't get you exempt. Depending on, what country you're in and whatnot. Your overseas earnings are taxed. It's just often different. But look, if you get into the category where you're north of about 10 million in net worth, then a whole bunch of interesting things become, look at the Panama Papers movie or not movie, but the documents around that, or the movie Laundromat. Yeah, the movie The Laundromat. Those are both that you'll understand that game. It's just expensive to do that. So it's not something, if you're a $200,000 a year person, that you should think about. But if you've been a $200,000 a year earner for, 20 years in this, then, then you're at the point where setting something up might make some sense. And also there's also a lot, those things change, and, but having a second passport isn't a bad idea. Some of the Caribbean countries have really loose laws. If you, for example, in St. Kitts, if you put $200,000 in a business or just fund one there, you get a passport. But that doesn't automatically mean you don't pay taxes in the U.S. anymore. It doesn't work quite like that. They're smarter than that. No, you don't have to relinquish U.S. citizenship. Even doing that doesn't protect you if the money is earned under the jurisdiction. So these are just way oversimplifications. It's really hard to hide significant income from the United States or any Western government without having interlocking entities. That's the way it's done, where you're paid a salary by an LLC somewhere, and that LLC is owned by another LLC, and that LLC is owned by 10 other LLCs in 7 different countries. And that's how you do it. You make it so it's so complex that nobody will take the time to chase it down unless you're a huge fish and there's a lot of money. And even then, it's almost impossible to do. So that's the point. But, if you're a simple $1 million earner, believe it or not, it's not worth it. Even up below 10 million, it's not worth it. You get above 10 million, it starts getting interesting. Understand that, firms that will do this kind of work for you won't even take you on with less than a $50 million liquid net worth. That's, not counting your primary residence, because they know it's not worth the billing if you don't have at least that much asset base to protect. So it's a very interesting, conversation, but it's way ahead of where most of us are. Anyway, so back on the stuff that I brought up. Excuse me. Are there any other questions or comments? What do you guys think just in general of this point? Because there's a couple of you that are there, For example, I know Maria fairly well, and I know what she does. She's, got Rugrats and is a full-time mom on top of everything else, trading. And you epitomize a lot of these things, the compartmentalization, having something else to do, something else that's physical, something else where your mind's completely different. I know you can identify with the fact that nobody knows what it is you do in the markets, even though now you're pulling money out, so you are trading for a living. And you're not alone. There's a few people here. I'm curious. Anybody else have any comments? Or you don't have to, but stick them in the chat if you do. Otherwise, we'll go ahead and wrap up. I like to keep this session relatively short, and we're right on about 40 minutes, so that's cool. But the fact, Brian, that you're thinking about those things, the business entity stuff and whatnot, that's really good to be thinking about at this stage, because if you get consistently profitable, you definitely want to go down that road. Oh, the family's down with the flu. That actually helps your trading, right? Exactly.
Silver linings.
Yeah, so that's interesting, Brian. That sometimes a relationship is really supportive of this world. I know that, and I totally get it. And so but again, don't get too big for your britches. Then if you're a scared money mindset, because no matter how much liquidity you have, that will still be there. Sometimes you have to respect that. Also, I wanted to tell you something else you asked me about. With copying trade or using the trade copier in Ninja. One other thing, always they have a little tool that comes with it to clean out the historical data from NinjaTrader. Do that every time you start up, at least once a day. Otherwise, Ninja fills up with garbage. I also do a reset, which you can do from the if you go to the little tools menu, database management, and then reset the database. Not repair it, reset it. There's two options that sound very similar. Or not, you want reset. Anyway, that's helpful. Well, I can't help you with that one. Let's see, I've tried to use your template on Ninja, but it wants a lifetime license. Yeah, a couple of the studies I have on my Ninja are, for example, the order flow, what it calls the order flow VWAP, that's from the lifetime license, and so is the bid. What is it? They call it the, hang on, let me look at it real quick. The one on the bottom of my fast one is called the cumulative order flow cumulative delta. Those are in the lifetime license, but there's all kinds of third-party stuff that you can do the exact same thing with. You just have to figure it out yourself. So, okay. That's why the template doesn't work exactly. So just try to mimic it with the third-party stuff that's available free. All right. So are there any other questions or comments about today's topics? If not, I will let you guys go. And let's see, did we break while we were talking? It looks like we did not, huh, Jamie?
Nope. It's a weird day.
It is a weird day. We had a nice push down while I was talking that made a great long here. I'm watching in queue and nice bounce off that. But other than that, yeah. All right. Well, we'll talk about it more at the close. I'll see you guys then for the last hour of equities into the CME settlement. And with a day like this, it could either be really quiet at the close or it could get really, really interesting. I think
that was my thinking exactly. It's either going to be absolutely dead with nothing to do, or there's going to be some crazy push in the next couple hours and we're going to get to an extreme and it could be great. Who knows?
Yeah, exactly. So we'll see. I'll see you guys for the last hour and we'll find out which we're going to get.
See you there.
Take care.